The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we close things out on Friday, grain and oilseed trades, soybeans had a decent recovery after a tough down day Thursday. Corn quiet, wheat was a mixed bag. Spring wheat did have a little bit of green on the screen. Pretty decent day in cattle as well, quiet in hogs. Plenty for us to unpack across the trade. Let's dive in and get some analysis. Jim Emter, Van On & Company, joins us for a conversation here today on Market Talk. Jim, welcome back to the show, my friend. How are you?
Jesse, doing well. Thanks for having us.
Well, I know an interesting week, volatile week in some ways, and kind of quiet to finish things out on Friday, which, after plenty of volatility, Jim, and looking at the technicals and more, a quiet end of the week is not always a bad thing, is it, Jim?
No, it's not. I mean, we came off of a pretty wild stretch here where a lot's changing. We got to keep up with the posts and tweets and, to kind of come in here and start to see some ranges develop isn't the worst thing in the world. The tech trader can kind of settle in here and start to make some sense of the charts a little bit. The fundamentalist is going to get made whole here, hopefully on Friday of next week. So again, we've got some volatility coming yet, but we're getting greater transparency on this crop size, getting greater transparency through the spreads and basis. So I think you just got to read through the details, and I think that's really what we need to unpack here today, Jesse.
Yeah, well, let's talk about this soy complex first. That's where everyone's focus has really been here as of late. I know on Friday, too, the EPA announced some small refinery exemption decisions, and that gave a momentary kind of news item for bean oil and beans in particular. But, when the dust settled on everything, green on the screen across the soy complex on Friday, what are you seeing when you dive into some of these charts as we work through this first week of the month?
Yeah, I think the biggest point is oftentimes when we come in and look at the charts, we like, kind of getting a gauge for, hey, if we activated price counts, are we in with retracements? What do we have here? And really in soybeans, we spent all year long really from this 960 up to about this 1060, 1070 area. That was the range of soybeans. As we broke out to the top side, we activated price counts and we found our way into that third price count of a fib extension that took us right into that 1135 to near 1140 mark. And that's a big deal. The market should exhaust there, take a breath, pull back a little bit. The next steps are going to be the most important now of what we can do here, but it did exactly what we needed to do. So I think a lot of people were scrambling yesterday saying, okay, why are we down 26 cents? Well, what's the reason? Hey, let's be real. Some farmer selling stepped up. We exhausted the technical action. We got to a peak level. We approached the first quant area. There's just a lot of information that was gauged up at that third price count. And so again, let's pull back. We really felt that was kind of a 1090 to 1110 type pullback area. We've achieved that. And now we've got to kind of settle in front of a crop report where I think this is where we have the mass of yield expectations. And what I mean by that is I can find people that believe this bean yield is going to be down to 49 for a national average. And obviously we've seen some privates that are up as high as 53.6. That's a pretty wide gap on what the carry rate will be based off that. And then we've got this whole China deal where they've came in here and, hey, they bought 4 or 5 cargoes. We got that business. And then right after that, they come in and buy for D slot 10 cargoes out of Brazil. And then they come and buy another slot there beyond March. So again, now we need to see that continuation of fulfilling a 12 million metric ton. And Jesse, I think China wants to see a little deeper drop here before they get after this. So I think those are the key technical reasons we're settling in here. If we can get above 1140, then 1205 is our next count. Otherwise, we're just kind of stuck here for a moment and posturing.
And to your point, I've heard a lot the last several days. Many folks have reminded me that, soybeans traditionally don't like spending time between 11 and 12. I mean, they're either coming back down to where we're finishing out the week here or they're going into the 12s. And so, you look at that, you mentioned China, our beans getting a little bit pricier than Brazil here just on this recent rally. So, I mean, there's a lot of things here that I think as we head into that crop report next week, Jim, we're kind of just going to have to wait and see and let it all flush itself out, so to speak.
Well, and I think that's the biggest point. But the benefit of the farmers, you don't technically have to wait and see. This is a risk management. You're exactly right on wait and see for direction. But as a farmer, you've got to be looking at your whole card here, because here's the other untalked about thing that I think we need to put together here. If you sell beans at, let's just say, 11.25, let's just use that futures price. Now, basis can vary depending on where you are, but here in parts of Minnesota, our processes are ranging anywhere from, let's just say, 20 under to about 60 under, 70 under as we get into the Dakotas. You're looking at a foundation there where you've got a reasonable cash price. Cash is about the high of futures was here a few months ago. And if you come in here, and Secretary Rollins has been very consistent about saying, hey, 12 billion, that's the number that it looks like we're going to see out of here. If that's the number, come add that to the soybean price, Jesse. There's a lot of people that are made whole in beans right now. So I don't think a farmer can afford to wait and see and run the risk of being either a hero or an idiot, for lack of better terms, in that structure. Let's do some risk management. If you make some sales, buy some calls, they're reasonable. If you come in here and buy a put, I know we can't go into the details of specifics, but there's ways to risk manage to make sure you've got potential, whether this market breaks or doesn't. And managing risk here is important.
Jim Emter with Van Ahn Company joins us here today on Market Talk. Let's go over to the corn complex. And I've used a lot of different adjectives here and thoughts lately about, what corn's doing: listless, quiet, just not moving, range bound. I mean, I've used so many words here. So give us the technical picture on this. I mean, corn, outside of all the volatility elsewhere, corn just kind of follows along, a little higher, a little lower. Just doesn't feel like we're doing a whole lot here right now.
Yeah, and I think we've got to come to the time frame we're in. This is the last 15% of harvest, Jesse. So again, I feel like the market wants to posture and join the soybean party. Hey, we got strong demand coming. But again, the last 15%, everything else has been filled up. The bins have been filled. The bags have been plumbed. The last 15 or 10% of this crop, if it's above and as good as the market thinks it is getting sold into the marketplace. It's either put on a DP type program or it's getting sold. And I think when they look at all details together, the soybean rally, a potential government payment in the soybean complex majority, hey, we just might need to sell something. I'm afraid corn's that kind of market right now as it's getting to town. Basis is just okay-ish, but you know what? It's been a good crop. Let's get it sold. At least that's the attitude through the northern plains here. And let's get it sold before it fills up and the elevator fills up. And I think that's the other component of it here. So basis is telling us that. The spread softenings are telling us that a bit. So that's what we're in right now. Let's technically break this down. If we get below 427, I believe we're going to come back and test that right shoulder of this inverted head and shoulders formation we've got. Let's not, let's come back to marketing 101 from back in college. You've got a solid left shoulder, you've got a head, you've got a right shoulder. That's what put the bottom in this market for now. We can come back down and test this 411 to 415 area quite easily in Dees corn. So if we break 427, that's where we go. But I see very good support into that area. If we ever get above 435 off the Dees corn, now you've got something. Now we go get the 443 to 469 type price counts that exist in this market. So that's a setup. Consolidation, probably the right thing through this harvest here. Let's also not forget, I got a seasonal chart right in front of me here. From now to Thanksgiving is typically a downturn in this corn market. So the technical trader, the seasonal trader, all looking at this. So I think the path of least resistance is to go take that potential dive, get down to that support area between 411 and 415 off the Dees corn. And then I think we're going to have a much stronger Dees Jan Feb thanks to the demand that's behind this corn market.
Before I ask you about the wheat trade, I do want to ask you Dees 26 corn versus Nov 26 beans, just because I'm starting to hear that chatter about the acre conversation for next year, and folks are starting to make some early decisions on seed and the fertility program and more. I mean, when you look at that spread for Dees 26, Nov 26, and just some of that early thought process there, anything stand out to you, Jim?
Yeah, I mean, so right away, you'd like to think that if Trump can get China to follow suit on the purchases, that bean can find its way towards $11.60 to $12. That's going to be the key here, because from a lot of our producers, that's what it's going to be, really needs to get to be made whole. If we can't get that pricing incentive out there in the Nov 26, maybe we see 3 million acres come out of corn go into soybeans off of these big corn acres we had this year, just for rotational purposes. But if we can't get that bean market high enough and into that $11.60 to $12 area for next year, then I think we're, maybe looking at a max of 3 million acres. So that's kind of my attitude. Beans have to go prove something here. Beans got to convince the farmer to do it, because the yield comparison between corn and beans is just not there, and the yield wins out every year, and we're seeing that year after year. Even with the high inputs costs, my initial incline is to say, oh, we're going to have more bean acres, but when you talk to the producers and really dig through the numbers, that's what I'm being told right now, Jesse.
All right, let's go over to the wheat trade, and I'm curious your thoughts here, and I'll let you take this whichever direction you want to go, Jim. But I mean, Chicago, KC wheat have felt like they've been trading a lot closer with each other here as of late versus the spring wheat. Kind of saw some of that on Friday, a bit lower in Chicago and KC, a little bit of green in spring wheat. I mean, are we starting to get a little divergence within the wheat complex as a whole? I mean, what stands out to you in wheat trade right now?
Well, the reports are, and we can't confirm it all the way to the official nature, but, China came in here and bought some soft wheat, according to reports. You get 3-4 cargoes bought, that gets the market excited. So guess what? Soft wheat is going to trade Chicago first, KC second. So those markets are attached at the hip. Now, technically, you come in here as well, and you see an action where we activate first price counts and get to it. Okay, that's great. So you got a tech trader right now that's active in the KC and Chicago. You've got that private purchase out of China, first time in, I believe, a year and 3 months, year and 6 months. That's encouraging, so that helps. The problem in Minneapolis wheat is what the Minneapolis Wheat Exchange has just occurred, Jesse. They got booted off the Globex system. People are a little uneasy. I actually tried to enter a spring wheat order and the system rejected me. We had to go build in the backdrop because some of the feeds aren't even processing in. We got it fixed in a matter of a little bit. But I just think what happens here is there needs to be confidence in the spring wheat contract for investors to come back in. And as much as they're cursed when the market's going down, liquidity is the name of the game. And while Minneapolis still has liquidity, I think you've just scared off some market participants for now. And that's why the spring wheat market has been left. There's not a story directly to spring wheat. It's kind of the off to the side market right now. And I think that's a bigger deal than what maybe people are talking about right now. And it's just going to take some time to get option contracts back in spring wheat, to hedge off some of the risk. Market makers aren't able to do that. So it's just a little uneasy time until we can get options back in spring wheat on the Minneapolis Grain Exchange contract and get things rolling in that nature, Jesse. Personally, I think that's the issue.
That is an excellent point. I'm glad you brought that up and talked about it, because I think you are exactly right. It's something that not a lot of people have really talked about here in recent months since all of this changeover and everything that's happened with the exchanges. So great thoughts to consider there. Livestock, just ask you broadly. I know we've had a lot of volatility in cattle, good finish to the week in futures. Cash has stayed fairly steady. Hogs have been kind of listless as well. I mean, just when you look at the proteins, anything stand out to you that you want to pay attention to into next week?
Yeah, I sure do. If we can just keep Trump off the media waves for a little bit here, I think the cattle can at least settle in. I mean, when you come off a Sunday with a 60-minute special saying, hey, beef is at one ticket, we got to get down in the grocery stores. And maybe I need to stop talking about Jesse. Maybe we all just need to give cattle a minute to breathe, and then we can come back to it. But I think that's a hindrance to the market. It spooks investors. Again, we talked about that in spring wheat. Curse them when they're selling off a market, which it is right now. But boy, we praise them when we get record highs. We need to realize liquidity is the key thing. It's been a get me out attitude. We're into a seasonal time frame where we can see that in the fat cattle. We've seen cash prices falter. We've allowed the packer to come in here and gain an upper hand. And I think all those components just kind of fit into the market structure. But let's be real about this. We're not enticing anybody to come into the cattle game right now. We're not changing the supply numbers from the U.S. We are short-term fixing a problem. And usually when we get that problem fixed, it'll go to the wayside, and that's when the market can rev back up again. So we hit fourth price counts this week or got very close to them in live cattle. We should see a corrective measure off there. Could we trade as low as 210 off the D's live cattle yet? Yes, that is truly that 210 to 214 area is where that fourth price count lies. Could we see slightly under 300 for the feeder cattle? Yes, but I think we can build some foundation here, start to get a market to come back, but now we need to see the cash undertones pick back up. And that might take until December, January days to see that cash start to rev back up again. I think we've got a strong Feb and April board coming back here. But for the moment, I think just as you bring in Argentina beef, as you potentially negotiate with Brazil, I think we put a lot of risk fear into the market on, oh my goodness, if Brazil opens back up, now we got Argentina. I just think we flooded the market with bare information. President Trump achieved his goal. Now let's just all chill out for a minute. Let's settle in. And I think the technicals can allow us to find some support here and build back. I don't think it's going to be just an immediate, surge higher rally. It's going to be a lot like we saw today. Get $3 higher, pull back a buck, get a couple bucks higher, and I think we start to step our way back up into some better prices to kind of save these cattle guys here in this market.
Always a fun conversation with you, Jim, and we always remind folks as well that risk of trading futures and or options can be substantial. Anything final you would mention or reiterate to folks here on the show today?
Yeah, I think just as you come in here to the winter months, especially for grain producers, just realize the past few years with big crops, as we start to see markets rallies, basis levels have tended to widen out a little quicker than what they typically have. So I really think producers are going to want to be attentive on the cash price and really the components of how futures and basis are making up each other, because I think there's a window here from, post-harvest Thanksgiving to about middle of December, maybe towards Christmas, where basis can get stronger here. But thereafter, if we're starting to push into some of these higher price counts, I think basis will start to widen because there's a lot of grain we're going to have to move. So make sure you're looking at all components of the marketing plan.
Jim, if folks want to reach out and talk with you and the team there at Van Ahn Company, what's the best way?
Give us a call, 800-648-5494, or else you can check us out on the web, www.vanahhnco.com.
Jim Emter, always good to hear from you, sir. Thanks for joining us here on Market Talk. Have a great one. We'll talk to you again soon.
You too, Jesse. Thank you, guys.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.